Hello, my name is Achim Amann from Black Label Properties here in Berlin, Germany. Today I'm explaining to you in this video why people are purchasing properties, especially luxury properties off plan in Berlin. In this spreadsheet, I'm just giving you a rough example here of a current listing we're having in Hasenheide 55, which is in Kreuzköln. For these of you who do know, the city of Berlin is a very sought-after area. A lot of young people are there, startups, artists, and it's between Bergmann-Kiez and Hasenheide, and Griffekiez, so just at Hasenheide. This apartment here the address is Hasenheide 55. The purchase price is 897,000 euros. It's 98 square meters large, so it's a 3-bed or a 2-bed, a large 2-bed, ideal family home, nice balcony, you have underground parking, and it's a brand new property. You're buying it off plan. The purchase price per square meter is roughly speaking 9,000 euros, so 9,154 euros. The expected rental income is 22 square meters per month, net rental income for you. So we're looking here at 25,872 euros, which is a 2.8% yield. If we compare that to other cities in Europe, of course, this is not very high, but again, you're here in prime location. In Berlin, it's a new build project, and it's the likelihood that the rent will go up in the next 10 years is pretty high. We have the transaction cost, so this is always something you should watch out for. It's very high here, especially in Berlin. So a very high figure is always the stamp duty with 53,000 euros. It's 6% of the purchase price. Then you have the agent, which is 3.5%. So to be precise, 3.57, including VAT. So 32,000 euros, and you have the notary and the court fees, including the land registry fees, which is 13,000 euros. In total, we're looking at nearly 100,000 euros transaction costs. So we have a total investment of 996,000 euros. Usually apartments here in Berlin, especially new builds, do not come with a kitchen. So you might invest another 5,000, 10,000 into a new kitchen. That's something you need to be aware of, which we not consider just here because we want to have a simple example. Finance, cost of finance, the interest rate, we come to this a bit later, is based, of course, on the equity you put into the apartment or to the transaction. So we have just made an assumption here, 30% equity and 70% loan to value. So that's a 70% mortgage. So we're looking here at nearly 300,000 euros of your own equity. Then you have a mortgage of nearly 700,000 euros. 1.5% interest, that's a typical interest you would expect as a German taxpayer. Sometimes for foreigners, we also can broker this, or one of our mortgage brokers, finance brokers can give you an interest rate on 1.5%, especially when you can travel to Germany and you're a European citizen. That's a likely opportunity for you. We have the repayment of capital, which is 2%. Some banks offer flexible repayment of capital, some want 3%. So we just took here the average of 2%. So the cost of finance is 24,000 euros year on year. The rental income, I just go up again. We have made an estimate here with our letting and management department, which is nearly 26,000 euros per year, which is 25,872,000 euros per year. If we take off the cost of finance, you still have 1,457 euros positive cash flow. So this is a month, 120 euros positive cash flow. You need to be aware of not all the costs are being covered by the tenant. So sometimes if something breaks, etc., you need to cover these costs, which we have not taken into account here. So I would say we have a neutral cash flow, and we have a yearly repayment of capital, which means you are gaining. Your value goes up because you have less loan against the property of 13,951 euros per year, which is 1,162 euros a month. You then have costs you can offset from your German income tax. From your German income tax. Yeah, you can offset these costs, which is 10,463 euros per year. This is the interest rate. And then you have the depreciation, which is 2% of the value of the property. We have taken off here, it's just an assumption, 20% of the land. Again, please speak to a local and chartered accountant here in Germany. This is very strict here in Germany. We're not giving you any tax advice whatsoever. This is just here to explain to you that the taxes do play an important role, and that you can offset the interest rate from your income tax in Germany, at least from the money you are earning in Germany. The total cost you're having, which you can deduct from your German income tax, is 26,000 euros. So this, of course, would change your cash flow, especially when you take in the interest rates and the tax advantages you might have. So we're now watching here in the investment case after 10 years. This is a typical period all of our investors are looking at, because after 10 years, when you sell your property, it's tax-free, especially in Germany. That's the current law, the tax law here we're having in the year 2021. Also, the most of the mortgages are being fixed on 10 years. You also can get a 5-year mortgage, 10, 15, 20 years. However, the 10-year time frame is pretty realistic, especially when you look on German investments. So address there still is the same, of course. The purchase price, including the transaction cost, is nearly 1 million euros for the nearly 100 square meter apartment, which is roughly speaking 10,000 euros a square meter. You have purchased in the year 2021. You're selling it in the year 2031. We have, of course, increase of rental income. We just made an assumption here. Every 3 years, we're increasing the rent by 15%, which is roughly speaking 5% year on year. So that would be your rental income, 37,000 euros. Again, this is a figure we can discuss. It might be a little bit too optimistic, it might be a little bit too pessimistic. We'll never really know. It also depends a lot on the regulation we're having here, but this is a new build apartment, which doesn't fall into any regulations here. At least that's the current case. So the purchase price stays the same, which is 996,000 euros. That is including all the transaction costs. However, now it's getting really interesting. The expected sales, the expected profit, which we took quite conservative, is 5% year on year. So that would be the price you would get in the year 2031, 150% growth. If you take just a 5% growth rate, again, this is 5% multiplied with 10 years. Of course, this is wrong. You should take 5% and then take 5%. In this scenario, we just try to make it simple. So we just took the 150%, which is 1.345 million euros. At the moment, we're having 8%, 10% growth rate year on year. If you observe our website or check the media, check the public reports on the price development, there's no end of growth in sight here, at least not in the near future. So I think the 5% growth rate is pretty realistic. Of course, you might have years with higher growth rate, you might have years with zero growth rate. Again, this is an example. Just wanted to show you the potential you're having here. So we take off from the purchase price the purchase costs, of course, you had this year. We take off smaller repairs, around 10,000. Please keep in mind, it's a new build apartment. It will be only 10 years old in 10 years when you sell it. We have 5-year warranties from the developer. We think it's going to be in great condition, so I don't think you're going to pay a fortune on renovation. The interest you have paid over the 10 years period is 104,000 euros, nearly 10,000 per year. Again, we know it's less interest because you have paid, of course, some money back to the bank. Just again, this should be the logic here. So the money you have made in the year 2031 is 234,000 euros, 641. So that's the profit you have made in the year 2031 after you have taken off all the costs. So if you now go back and look on the equity we have invested, which was nearly 300,000 euros, you had a growth rate on your equity per year, which is nearly 8%, 7.85%. This is a pretty good growth rate compared to other cities or other investment products, especially when it comes to property, because the Berlin investment market is being dominated not by the yield, it's dominated by the growth potential we're having here. And I think this is quite realistic. So if you invest into the new build sector here in Berlin, Germany, especially if it's in prime location, even though you're buying for roughly speaking 10,000 euros a square meter, the likelihood you're going to make money even in the 10 years time is pretty high. And even if it's not going to be 8%, it might be less than 8%, it might be 5, 6, 7, might be even 10, 15% profit year on year. It's still a safe investment because you always find a tenant who pays the extra. So taking all this into consideration, please feel free to contact our agents, contact us in the office. Please challenge the spreadsheet. The spreadsheet is here just to give you an overview of why people do buy in Germany, especially in Berlin, the capital. but also in other cities, and why people buy luxury apartments in the city center. Thank you for watching this video.